Is with us
discussing, the
mortgage expert
prices of real estate in Vancouver. Yeah, because we were talking, Angela, yesterday about Investors Group coming out with this 1.99 rate, which was, made huge news across the real estate world, and everyone talking about this incredibly low rate.
Yeah, because they had talked about, the banks had talked about doing this before, and the former finance minister Jim Flaherty had come out and saying, bad idea. It's about it.
Right.
So what do you think about 1.99?
Well, this sounds absolutely fantastic, and the rate itself is great, but it does come with heavy restrictions. And when we talk about some of the restrictions that are associated with this mortgage, you cannot blend this mortgage, you can't port this mortgage, you can't refinance this mortgage. The only way that you can possibly get out of this mortgage is to sell your home. And when you sell your home, not only are you faced with 3 months interest penalty, but you could also be charged with the IRD, which can make your penalty 3 times the normal penalty to get out of a variable rate mortgage, so it can eat into your equity. And in addition to that, what a lot of people are unaware of is that it's actually registered as a collateral charge. And what a collateral charge does is the lender essentially owns your equity, and you don't have the ability to get a secure line of credit in the future from a different institution if you needed a home line of credit. So when you talk about these heavy restrictions, buyers tend to not be so comfortable with these types of very buzzworthy mortgages. And one thing to also note about this is that the funds are extremely limited. So this lender is not offering it for their existing clients that host a mortgage with them currently, and they don't generally do insured mortgages. They only do conventional mortgages. The exact reason for them doing this is so they have the opportunity to cross-sell you products, and so they're only looking for clients that they can have multiple products that they can sell you to make up for that.
So it seems like it's more of a publicity stunt in order to get people talking about it. Which is working.
Yeah, it's great. But, as your accredited mortgage professional, we walk you through the terms so you don't make the costly mistake of getting into a mortgage that might be too good to be true for you.
So who is going to go for this then?
There's going to be a very select few, and this will be over in a matter of weeks.
Really, that's it, eh?
So is anyone going to follow suit?
No, because there's no benefit to other lenders providing discounts that much. And again, the great thing about it is it brings light to the most important thing about mortgages is the actual terms, because terms can eat into your equity and not give you the lifestyle of why you own a home in the first place.
And this term was only 36 months, so it wasn't a longer term. So they're hoping once they catch you that you'll go to a more conventional mortgage after this one, I guess, and then they can jack up the rate a little bit.
Well, speaking of jacking up the rate, the only thing that you can do with this variable rate mortgage is lock into a fixed rate, but their fixed rates are 0.5% higher than anybody else's fixed rates on the market on average. So you really have to pay attention, and that's what we do as your accredited mortgage professional to make sure you understand the terms.
A way to reel you in a little bit.
Oh, that's what it's all about.
So there's always this question about, and I'm sure people are in it right now, that we've had interest rates so low for so long and they aren't moving up at all. Are you good to keep with a variable rate right now, or should you lock in depending on what the rates are right now? Because a lot of people are thinking, well, if the rate's not going up, why lock in at 3.65 or 4, whatever it is percentage, when you're getting such a great rate on a variable? So is it now the time to lock in, or should you still wait for a while?
No, the right variable rate mortgage will help you pay your mortgage down faster with the right strategy.
Right. So that's it. Just stick with the variables.
Absolutely. Also, most variables have the least amount of cost in the event that you need to exit the mortgage for any lifestyle change. It's the easiest mortgage to get out of and move on with the next stage of your life.
Where do you see rates going?
Well, rates will remain stable for a period of time, and the most important thing is to be able to optimize the mortgage and have a great strategy along the way, so regardless of what happens. And part of the proactive mortgage strategy that we put together for you reviews your mortgage every year, so if there is a change in the market where you can benefit from anything that's out there, you'll be automatically notified.
Thanks, Angela.
Oh, it's my pleasure. Great to see you guys again.
Good to see you as well. How can people get in touch with you?
Oh, they can visit me at angelacalla.ca, or they can tune into the Mortgage Show on CKNW Saturdays at 7 o'clock.
Excellent. Thanks, Angela.
Thank you.